All right, there he is, the man of the hour, Tech Trader. He's going to join us for our Trader Talk segment. Good morning, Sean. How are you?
Morning. How are you doing?
I am doing quite well, thank you so much. So, Tech Trader, let's talk about the NASDAQ a little bit here. We are not too far away from all-time highs. I'm looking at the triple Qs just for sake of reference there for everyone on Trader Audio Visual, and we're, what, $5 away from all-time highs? Are we going to break out into a new high range, or you think we got a pullback coming in?
Don't know. It's still. I still don't really like this market. It's
You
not.
do
It's
or
not
you do not? I'm sorry.
No, I don't. I mean, it's not preventing me from doing things. And it's not. I certainly like it. Kind of how quite a few of my longs are responding, but it's. I don't know. I just don't think it sets up. I mean, put it this way. I say the same thing I've said pretty much. I don't know, since late February. Well, I don't know quite when. I mean, we went from super bullish to moderate bullish to neutral to kind of bearish. So probably went bearish, I don't know, a few weeks ago. But I mean, I still like my longs. I still think there's a lot of value in plenty of names. Still like my 5G theme. Still like my fiber optics theme. Love Twitter. Love Baidu, etc. So, but it's here's what would change my view. If we finally see more of a rotation trade. So I will say this. I mean, finance stocks are a little stronger this week. Energy stocks are a little stronger. So if I see other stuff other than cloud hype leading the rally and extending the rally, then yeah, I think we could go higher. I mean, I've also said. I mean, I don't want to talk out both sides of my mouth because I still think we're prone to some kind of a near-term correction. At the same time, I'm not one of these guys who is on Twitter all day screaming that the next bear market's right around the corner and we put in highs for the year. In fact, I've said I don't think we put in highs for the year, and I think the market can actually trade up quite a bit. I just think it needs a breather, but maybe the breather comes in a rotational breather, a consolidation breather. But usually when everybody kind of gets to the point where, okay, I'm throwing out my hands. Yeah, I'm tired of fighting this. Yeah, I'm just going to go bullish and buy anything I want. That's usually when they eat 300 or 400 or 500 NASDAQs. And we have had two pretty good down days. I mean, there was a Friday that was down huge. I think it was last Tuesday or Wednesday we were down huge. So we have had some pretty nasty, sharp sell-offs. They just haven't had any follow-through. The follow-through's sort of been on the upside. So to the point that I was talking about earlier, though, I'm not seeing a whole lot of love in the cloud stocks. I mean, Zscaler was upgraded today. It's been fighting to even be green today. It's barely up. It was down. Kind of pencil in any high-value cloud stock. The last 2-3 days, they haven't really traded much. A lot of them are down, probably more down than up. If anything, again, my leadership group is 5G fiber optics, and that's every time there's the rally extends, those stocks do great. So, I basically think we're in a market where I think every one of my shorts is going to work. I think a lot more of my longs will work and outperform the most highly valued, overhyped, overbought cloud longs, and in fact, I think my longs will outperform them by magnitudes, or I wouldn't be in them. And I even think, again, Cloudera beat heavily maligned. Pivotal didn't trade well. ZUO didn't trade well. These are names that are very buyable, at least to hold or buy on dips. And again, I think the only risk to those type of names is that if you finally do get a really, really ugly cloud correction, they'll probably pull most of those down. Although I'm almost to the point where I think Cloudera could almost be Twitter-like. And what Twitter has a tendency to do is Twitter doesn't need an up market to go up. It can go up in an up market, but Twitter can trade strong in a down. In fact, it's some of the strongest periods Twitter's ever put in have been in relatively nasty downside markets. So I almost think Cloudera could kind of do that. And in fact, I almost think Cloudera might be a strong performer if the market corrects. I think it's kind of reached that point. I'm trying to think of just some other generalities. But you know, here's the best thing for the bulls, like the guys who think S&P and Nasdaq's going higher in coming days and weeks. Sentiment's not. So we have had a sentiment decline as the market has slowed down. And that's not an uncommon occurrence. And what I mean by that is you'll often get, just like stocks can reset. So like RSI, MACD, ADX, whatever, Williams R, whatever technical indicator that people like to use, those things will reset and go lower as if stocks just go sideways instead of going down. Sentiment kind of does the same thing. So really, really overbought sentiment readings will ebb or go down if stocks just cool off or they slow the rate of ascent, or they decline a little bit or go sideways and consolidate. So things like, the things I look at, like a lot of my oscillators, the Cleveland oscillators, NIMO, NAMO, NICE, NAPSI, all that stuff, it's pretty subdued. It's pretty subdued. So it's not at a scary level at all. So, and it's sort of backed off from formerly scary levels. So the only sentiment readings right now that you got to be kind of starting to get a little worried are like cumulative new high, new low readings, percent bullish readings, and some of the percent bullish reading in tech is very high. So there's a few things out there that are elevated, but they're elevated because they've just been elevated off the rally. But by and large, a lot of the sentiment readings have cooled off. So hey, if the algos want to fire this stuff higher and really pull more late buyers in, and lead them to the path of destruction later on, they easily could. I mean, it's in fact, that's kind of what the market feels like to me. It just kind of feels like it keeps pulling people who haven't participated at much better prices. It keeps pulling those people in at higher prices. This is the whole greater fools theory. So, at some point, the merry-go-round's going to stop, or the ring around the rosy is going to stop, and if somebody's not properly positioned, they're going to get hit hard. The other thing, and the last thing I'll say on this is, and I've written a couple notes on this, I actually don't like the last move of the Fed. So the Fed actually got more dovish. And I kind of alluded to this. I actually think the Fed almost might be overshooting in dovishness. They overshot in hawkishness, which kind of caused was part of the last correction. Then they had a reverse course, but now it's almost like they're doubling down on dovishness. And sometimes that's exactly what happens late into that move. I think a lot of people believe that the next move in the Fed is actually going to be a rate cut now, not any further hikes. And I think a lot more people believe there's not going to be any, the Fed might just not do anything. And I kind of still think, no, I mean, they're going to hike rates more. I mean, I would be pretty surprised if they don't jam at least one or two in this year. Again, they might do the worst time that the Fed should do a rate hike is December. Yet for some reason, they love doing December rate hikes nowadays. I think last year they didn't do one because of the demise of the market, but I think they've done one like 2 or 3 years in a row. So yeah, they might just do one at the end of the year, kind of just do one. So I don't know, we'll see. But the belief that there's this never-ending Fed put, the belief that the Fed's even more dovish. I mean, Larry Kudlow is out saying they should cut rates 50 basis. I honestly, I just don't even know where that stuff's coming from. So. But if that has been a reason that the market's gone up kind of since the last Fed meeting, which it largely has, I don't know. I mean, I would not want to bank on the Fed cutting rates for the market to be rising. I'd want to be banking on a lot of other things than that.
Well, you do have to recall, though, that that was what got us moving over the last 10 years. So old habits die hard there, Tech Trader.
Well, the Fed's done a lot, right? I mean, it's not the Fed. The Fed's always going to move markets. But this is getting into kind of the nitty gritty of Fed, like Fed cycles and things like that. But I don't know. We'll just have to see. I just think if a ton of people are banking that the next move is going to be a cut instead of a hike, and that's the reason to buy stocks, I don't think that's a good reason to buy stocks. I think that's the easiest way to say it. I think you better have other reasons to buy stocks than that.
All right. Well, since you bring it up, let's talk about the reason that you felt you were compelled to buy LYFT stock. So this one's gotten crushed since the IPO a couple days ago, and it's now trading 67. You went in and dabbled with a starter piece in this one yesterday, right around 69. What do you like about it, first and foremost?
Well, I got scrubbed, so I didn't buy at 88, bought at 80, got scrubbed, and then reloaded lower. And pretty much from where I reloaded, so again, people know I don't like to use stops. I will use them, and if I'm going to use them, I point out that I might use them, and that's exactly what I did. I don't love the deal. I mean, better said, I don't love the company. But things are kind of lining up. I mean, it's, the same people that came out and said that they didn't like Facebook, and not that they didn't like Facebook at the IPO price, because I didn't either. That was 44, 45. But the same people that are kind of came on TV, I have a very long memory for this stuff. In fact, I take notes on this kind of stuff. Same people that didn't like Facebook into Facebook's decline, exactly the same people don't like LYFT now.
Well, Facebook had... It took a while for that decline to start. It wasn't right out of the gate, wasn't it?
It traded terribly.
Oh, did it?
I don't know. Yeah, it traded bad. I mean, the all-time high on Facebook until they retook this high many months, if not many quarters later, was $45. It was basically the first trade out of the gate. I don't think LYFT will take as long. I mean, Facebook probably took 3 quarters just to get back to 33, by the way. I think the low was 19. I was a huge bull on Facebook once it got cheap. Even 33, 30 on the way down, I was buying it. Still buying it at 20 on the way down. And that was massive move for me, massive name for me. Facebook was my second largest position after Apple in 2013. And so those are some very, very fond memories as I think back. But the whole point is don't misconstrue. I don't view LYFT as a Facebook. Facebook was a game-changing company, incredibly consistent revenue streams. I believe they might have been profitable at their IPO. They certainly weren't a heavy cash burn name. I think they were either a cash generator or close at the time. So the dissimilar companies, but it's more that I'm looking for things, again, similar people bearish on the name and then bearish on LYFT now. A lot of similar kind of media commentary. It's popular to make fun of LYFT. Let's call LYFT drop instead of LYFT. It's just that kind of stuff. I mean, again, that's sentiment. That makes up sentiment. A lot of commentary from people. I can't wait for options to trade so I can buy puts on LYFT. Things like that. So again, I think it's going to be a good trader. The main reason I want to get involved in it, I don't know, like a Pivotal is a very good investment in my view. I think LYFT is going to be a very good trading stock. I don't know if LYFT is going to be a great investment. In fact, 3 years from now, it could be lower than it is right now. But between now and then, I think it's going to be a name that gravitates a lot of trading interest, a lot of volatility. I think there will be, put it this way, wherever the low is, the next move up is going to be really good. I don't know if it's going to go back to 88. In fact, I think it might struggle to get to 88. But it could be a very nice move off of, whether it's today, it's the low, or tomorrow. Here's the other thing I'll say. Whatever day it doesn't gap down is probably the day it's going to go up a pretty decent chunk. And I think the first 3-4 day upside move on it could be good. Could be 5, 8, 10 points. So I'm going to grab them. I'm going to grab that move. And then I'm going to rinse, repeat this bugger a bunch of times. That's kind of my plan. In fact, I had this thought on Elastic. So when Elastic came out, I was very, very interested in possibly trading it, but they jammed it up too much. The IPO was 36. I think first trade was 62. I wouldn't do it. So even though the name has worked, I'm not gonna. It went outside of my disciplines. So if it would open 45, I would have been trading Elastic pretty much since its IPO. But Elastic didn't open 45. This thing didn't open, again, 88 wasn't then interested. 80 tried it. 72, 70 pretty much at the IPO price and below. I'm not afraid of the name at all. So, you know me, hey, a 20% decline in something doesn't bother me one bit. It causes me no anxiety, no fear. I can be extremely relaxed. I've got tons of winners. I've got tons of cushion. Been an awesome 2, 3, 4-year run for me. So, I'm going to trade LYFT, and I'm pretty sure I'm going to make quite a bit of money on it. And I do think when it finally kind of bottoms and goes up, I think people will be surprised how much it goes up. So now if you want to talk about kind of IPO dynamics, okay, LYFT has a low float. Fairly big market cap, but not huge. But LYFT has a low float, very skinny float. I think LYFT is being put into strong hands. I think it might take a few more days, but I think once you get to a point where you kind of run out of sellers, and a lot of people own it that have no intention of selling it for a 2-point pop, but maybe they want a 15-point pop, I think this thing could go. So we'll see. And I might trade this thing for anywhere from a 2 to 3 point gain. I'm not going to clip it for 50, 75 cents. To me, that's dumb. If somebody likes trading that way, I'm not saying they're dumb, but it's dumb for me. If I'm going to be involved in LYFT, I want to get, my typical trade. I mean, what was my last BE trade? I don't know, 20% pop. I kind of like the trades. Now, higher price stock might go a little lower, but I'd say 3, 4, 5 point would probably be kind of a minimum gain I'll take on it. So yeah, I'm looking to buy more. I can't say where it's bottomed yet. The action today is pretty good. The gap down was less severe than yesterday. There were some buyers of that gap down right away. You got some early trend line kind of crossing happening. You're kind of getting a little buying here again. Look, just mark today's low and see how it acts on a retest if it does retest. But if it retests and holds and it doesn't gap down tomorrow, that maybe we have some upside. But I think that's my view. I'm not telling anybody else what they should do. Again, look, if somebody wants detailed risk management advice, they should consult, their own financial professionals. We just share what we do. My plan is to trade LYFT, and I might trade this thing like 100 times in the next few months. So we'll see. I'm not going to post all those trades either because, again, I don't have that relationship. I don't have, I'm not full-time staff at briefing per se, right? I'll try to do my best with providing ranges, dip buys, dip levels, then amounts of money I'm going to take. But I think I've been pretty clear. I mean, I think like now I'm looking to to increase my second, third, fourth piece possibly. I want to see a bottom. I want to see it curl higher. I want to see, the ideal setup would be a retest of today's lows and then a gap lower tomorrow that does not violate today's lows. That would be a nice trading setup if somebody wants to kind of try to mark this short term. So, but I don't know. I mean, I don't know where the low is. I tend to know the lows pretty good when I see them. I can't 100% say I've seen the low in this yet. But I think once it decides to go up, I think it's going to go up pretty good. And then the names I'm more interested in, I think Pinterest will be a very, very good deal. Again, I hope it doesn't go so nuts like Elastic did, but Pinterest is a name. That's one I literally have investment interest in. So I view that as maybe the best or the highest quality of the coming IPOs. So we'll just have to see. I hope it's more subdued. I hope it doesn't do an Elastic and kind of locks me out of being involved. Slack is going to be a very strong deal. I think that has very interesting dynamics, very good platform. I haven't really heard anything I don't really like about Slack. Again, these are all valuations. If the valuations let me in, I could possibly be interested. There's another deal late this week. It's a trading company. God, what's the name? I can't remember the name now. That I was just going to mention it. I don't know. It's IPOing Friday. That's another name I'm interested in. So, and I'm glad I have a lot of cash. I've got a lot of buying power. I think there's going to be some really good trading opportunities with some of these IPOs. Again, as long as they don't go elastic, meaning, the IPO price is 36 and first trade 62. That doesn't excite me. So we just have to see how they open. We have to see how crazily highly valued they are. None of them are going to be cheap. The good IPOs are rarely cheap. By the way, I could say this now. Now, LYFT it's harder to value because they have such a high cash burn rate. But if one assumes that they will, here's what usually happens when a company goes public. At that point, the point at which they decided to go public, they've also decided that they're going to control the cash burn and lower their cash burn dramatically. Because if they know they keep their cash burn that high, a public entity is just not going to work very well. So again, this isn't perfect information, but this is playing pretty high statistical odds. My guess is LYFT is planning to subdue their cash burn now that they're a public company. So I don't think you can assume that the cash burn is going to be high. I think you can assume it's going to improve over time. I think, but on price to sales valuation metrics and things, it's not crazy. It's not. I think Uber is crazily expensive. I don't really think LYFT is that expensive. The problem is, though, it's easy to do the math and say, well, geez, look at that cash burn, and if they don't fix that, they have no money in 3 or 4 years. And that's true. But that also assumes they can't get more money. And it depends kind of how people are going to treat them. Tesla had a very high cash burn for a long time. It didn't prevent that stock from going up. So we'll just have to see how it trades. But my plan is more of a trading plan than an investment plan. I think it's going to be a very good rinse-repeat trader. It just needs to find a low.
All right, so we really need to think of this one in terms of not your normal your normal position, where typically you like to hold things for multiple quarters, maybe even multiple years. And I like to build. I like to build cheap, hold for value, hold for price targets. But I'll trade around a core position quite frequently. I've posted a ton of Twitter trades around my core position. But yeah, you're right. This is a different. I'm definitely viewing this differently than my typical position. I would agree with that. Okay, so it's not going to be a core position. This is going to be one of those trading vehicles that you're going to use from a swing trading perspective. Safe assumption.
That's my plan currently.
Okay. All right, so I wanted to make sure that everyone out there was aware that this will be a little bit different than what you're doing on a normal basis with some of the core positions that you hold in your focus list and whatnot. Because one of my questions was going to be, considering on your, Mount Rushmore of investing idols, Warren Buffett would fall probably front and center, and we had heard him say something to the effect of he can find a lot better companies to invest in than LYFT. And so I was going to ask you about that one, but considering this is a different trading vehicle for you, I guess it doesn't apply.
By the way, I would basically agree. Hey, anything I have that I've had for the last 6 months, 9 months, again, we can pick on a couple of my names that haven't worked as well. Although, again, Cloudera had an extremely good success. Like first three times I bought and sold it worked extremely well. But if you want to just pick on it now, that's fine. Pick on Cloudera. I think Cloudera is far better investment than LYFT, especially from current prices. But I can't trade Cloudera if it's only going to move 15 or 20 cents a day. If LYFT is going to start moving 2.5 to 5 points a day, it's going to be a much better trading vehicle. So yeah, I kind of agree with him. Remember, though, I've taken a lot of Warren Buffett ideas and applied them to tech, and he literally has not been a tech investor most of his life. I've always been a tech investor. So. And trader of tech names. One of his very first forays into tech was IBM. Didn't go very well for him. And in fact, I would argue he actually sold out or sold down his IBM position almost at exactly the wrong time. He also he also levered up and greatly increased his Apple position at exactly the wrong time. At the time, I wasn't at all interested in Apple. You know, he wasn't involved in Apple in 2004, 2007, 2009, or 2013. Those are all great times to buy Apple. And by the way, he's not really buying Apple. It's his guys. The two guys he hired to basically take over stewardship and run a lot of the public money for Berkshire, they're the guys buying Apple. He's just endorsing it, but I don't think he's really making that decision to do it. He's promoting their decision. He's defending them, but I don't think he's again. It's not his core competency. So anything that's sort of tech related, you know, Buffett just never done much. I mean, Charlie Munger is on record of saying one of the names they messed up on the most was Google, and he's talked about how huge Google's moat was, and that they should have been in Google and had an built investment and stayed in Google. So that's one name that Charlie Munger specifically has sort of admitted that they messed up on. But by and large, you know, Berkshire Hathaway just hasn't been much of a tech investor. So I'm not saying that, you know, ignore what he says because I basically agree with him. But I don't know. I mean, they just do very little tech. So you know, I wouldn't put that as much. I guess as much weight in comments and the comments that they're making around tech names, because that's not their core competency.
Yeah, and that's a valid point there. He really doesn't do too much in tech, at least until they're a very entrenched company. Yeah,
I mean, he basically went most of his investment lifetime and not invested in tech. I mean, it's pretty amazing, but he didn't. But he didn't need to. I mean, that's the beauty of the market. I mean, there's so many names. You know, I mean, one of his favorite expressions is, "Look, you know, the market gives us so many pitches, we don't have to swing at very many of them," and that's totally true. So he wasn't a tech guy, and he didn't need to be. He made plenty of money and plenty of other stuff. So you can't fault his success, and you can't say, well, he should have been in tech. Why? He didn't need to be in tech, right? So I might argue that maybe Berkshire's results would have been better if he would have stuck to his knitting and never done tech. Because IBM put a lot of money into it, didn't really work, didn't really lose a lot of money on it, but he might have lost some. He certainly didn't make any money on IBM. And I don't know. I don't know where his net total cost on Apple was. It was not great. It's a fairly recent buy, and they bought a lot of it high. So I don't think they've done that great in that name either.
Any new updates on Twitter? This one's been kind of sitting around that $30 to $33 range for a little bit now. So any new updates? I mean, you had a pretty your price.
I would literally say no change from my last couple notes, because I've been I think Twitter is, you know, maybe it's kind of waiting for Pinterest. You know, maybe it's going to wiggle a little around Pinterest, but I think the pins, I think that they already have a ticker, PINS, which is a great ticker for them. I think that I think that will help their valuation, because I would be almost shocked if Pinterest doesn't trade a valuation above Twitter's market cap, which again should highlight the value of Twitter. So yeah, we'll see. You know, I think Twitter is setting up for a gap fill. Bottom of the gap's $37, top of the gap's 42. I think that happens. I don't know exactly when. Yeah, I've been looking at some June calls, been looking at some January leaps. You know, I got a lot of it already, but I might lever it up with some option exposure. We'll see.
All right, so we did have a couple of listener questions that I need to touch on. The first one was ADTRAN, ADTN. This was a name that you called out ahead of the earnings announcement, if I remember it correctly. Yeah, so they want to know if you still like it. Are you still holding it? What's your call on ADTN?
I do. I have some. I like it. It's actually had a decent little pullback here. You know, it was almost getting, I was kind of eyeballing like 1350, which it wasn't too far away from a day or two ago. The CommScope was upgraded today, by the way. That's a smart upgrade, but I don't like it because it's basically kind of a sister company. I really want, and same thing. 2 days ago, CommScope was very close to a buy point for me. I just didn't do it. But I do. I think that's exactly the type of name that could do well. I think their propensity to have better quarters is pretty high. Again, CommScope, ADTran. Another name I'm sort of sniffing around, I'm just going to bring it up because it's just on top of my mind, is Juniper. Juniper has been a much maligned stock. It it hasn't really done terrible. It just hasn't gone anywhere. That is kind of interesting to me. Again, there's a lot of potential 5G names. And, you know, a small number of them, well, the whole space kind of lifted, but it's kind of been a gradual lift. So whether it's IIVI, LITE, I mean, LITE's done very well. In fact, I sold LITE too early, but there again, I'm more of a trader of that name. The trade worked beautifully from last time I did it. Again, Acacia's been very strong. I mean, Acacia's more than a double for my low-cost basis. It's up probably 60 to 70% for my total cost basis. Acacia looks like it wants to go higher too. And the valuation, even though it was so dirt cheap at 30, it was just, again, astounding, which I think I wrote about. But ADTran's in that whole mix. They're in that mix. I wouldn't say they're a great name, but I think they're a solid name, and they could catch a very good cycle. And so there's quite a few names in this space. We'll just have to see. But yeah, no, I like it. It's cheap, dirt cheap. I mean, I'm almost surprised that the last quarter was pretty good. I mean, they got this is one of those things. Sometimes you get a stock, and the stock will move a certain percentage, even though that percentage isn't very many points. And this, this is a cheap stock at $19. And so, but just the fact that it got cut in half, right? So last October it was 19. December 24th it was 10-ish, 10.50, 11. Okay, so then they pop a good quarter. Well, it goes up a big percentage, but really haven't recovered that much. So I think this is one of those. I think there's plenty of room here. I'm not going to say it's not one of my top 5G/fiber optic names, so I do like it. I have some long. I was kind of hoping it would go to, I was pretty close to buying some more. Actually, it's funny that question came out because I was eyeballing this literally 2 days ago. And then today it's popping, or I guess it popped yesterday. Yesterday it popped a little bit, but I don't know. I mean, we'll see. They report 2-3 weeks. It'll be one of the names I probably talk about more closer to the report. But again, CommScope's another one I like. I still think most of the fiber optic space will report good again. Here's the one that's a little interesting, that they have heavy Huawei exposure, which I think is why it's dropped. But they didn't miss, and they didn't guide down. And is Neon Photonics is kind of interesting. NPTN. It's not a name I'm ever going to sink a bunch of money into, but I do think it represents pretty good value down here in the low sixes. And I think any good news, and this thing could easily pop a big percentage. But they actually had a pretty good quarter, and I think people just kind of got spooked. Again, anybody that kind of knows this name should know that Huawei is like their largest customer, and 65% of their business comes from China and has pretty much forever. But again, it's like they sold off on it, and there's a lot of people look at stocks that don't really know much about them, and so I think some numbers came out. Maybe people didn't know the name, didn't know the heavy China exposure. They kind of got sold off. They're kind of a victim of the Chinese trade wars too. So anyway, to round it off though, I think ADTran's fine.
All right. And then another one that we had on the list for you is PSTG. How familiar are you with this one? Pure Storage.
Yeah, in fact, I'm going to put a note out on it. This is a name I used to know really well. In fact, I was long this name a few years ago. I did pretty well. I don't know. I think I owned this around 10. And made a pretty good percent move on it. It's a weird trader. What basically happened to me on this name? I just got involved in other names that I like better, and I think that's really where I'd be now. Like a Nutanix is pretty good price again. Cloudera is pretty good price. Pivotal, ZUO. And then any number of my other positions I talked about, Redfin, Twitter, Baidu. So it just doesn't. I literally don't have room for the name, and I don't think I really like it that much. I mean, I would say I like it a lot more than things I'm shorting, but I don't like it enough to be long. And here's the other thing. It was pretty attractive at the end of the year, like lots of things were. It's had a big move. I mean, so the problem, I think some of the question was something, and again, I'm going to address. I think somebody asked it, like, is it a good swing long? Well, I mean, this is when you basically have to have the market go up. If the market goes down, one thing PSG will almost always do is drop more than the market does. So if you get a market correction, this thing's going to drop a lot more than the market declines, because that's pretty much how it trades. And then it kind of grinds higher as the market goes up. So it's a little tough. I mean, I'd rather have names that actually could go up or hold value if the market goes down. And I almost... Hey, is it a time that PSTG could actually go up? Well, it could, but I don't think it's ever done that. I think every time the market corrects, it goes down. So it's more. If he had asked the question and the stock was 16, I probably would have said, yeah, I think at 16 it's probably fine. And yeah, I think it probably could be a good swing trade. Almost $23 off of that $14, $15 low. Yeah, that was an extreme low. It was kind of dumb, and the upside's proven it, but you just have to look at how much the name has gone up. So I think there's just other names I like better. I think that's the easiest way to say it.
All right, another listener wanted.
But it wouldn't be a name I would short. Like it wouldn't show up on my radar as a highly valued name that's an attractive short. So it's basically kind of in a big do nothing pile for me.
All right. So now another one wants me to ask you about Nokia, N-O-K. You don't bring this one up in your basket of 5G stocks. I'm curious what you think about this one. It's trading down here at the high $5 range. Hasn't done much, between 5.5 and 6.5 for quite a while. So what's your overall thoughts with this one?
Kind of the same. I mean, kind of
the same as what? As PSTG?
Well, as yeah, but except this one's a different. It's at least you've got a lower risk entry, and this one might hold value if the market corrects. But see, I don't know. I mean, relative to kind of every 5G/fiber optic stock, I just don't think it's that exciting. I don't think it's got. I mean, I haven't missed anything by not being in it. Again, the best thing for them is if Huawei gets neutered and stays neutered globally. I don't know. You get a really good China deal. Is Huawei allowed to kind of turn the spigots on? Now, Huawei isn't going to do as much business as they were going to do before. I think the security concerns are now kind of a permanent fixture. I think North America, Europe are going to be more inclined to use North American and European vendors over Huawei. But I don't think Huawei's dead. But I think maybe the thing I don't like the most is I almost think the stock should have acted better, because for the last 6 to 9 months, Huawei's been very much on the shelf. And maybe there's some orders coming and things. I mean, hey, it's a 5G name. It'll probably go up. It's probably a decent value. But I just don't think it does anything for me. Again, IIVI, Acacia, LITE, Qualcomm. I mean, we could go on. I don't want to reiterate the same list we've talked about 100 times. But I don't think there's any of the names I have that I would rather buy, Nokia over. Even on the more the best thing about Nokia is is a relatively low risk. But the problem is on the low risk side, I mean, yeah, there's a fair amount of price volatility, but I think IIVI and LITE are very long term if you have an investment long term perspective, because they're basically you got a duopoly in effect in between those two companies. So price volatility, short term price volatility aside, I think long term investment prospects for both those companies are very good. Then if you want to go a little deeper into the food chain, again, the high risk names I tend to like better. I can trade them more frequently. I would probably say this. If somebody would say, look, would you rather buy Nokia or Cisco right now? I think I'd rather buy Nokia than Cisco. But I don't like Cisco right now either. So because and that's a name I did like at lower prices or have liked the lower prices in the past. And Cisco's going to keep getting a lot of business. Cisco's got a very good, like, this is a kind of a cheaper momentum stock that can keep going. If the market keeps going up, Cisco will keep doing fine, probably has less risk than the market. But I would buy Nokia over Cisco, but I don't buy either name. I like other names better than both those names. Honestly, you know what? I'm going to circle back to Juniper. I think Juniper sets up pretty interesting right here. So I'd probably rather buy Juniper than Nokia. And again, I don't know if I'm going to buy Juniper this year, but so I think that's the best way I could frame it. I think I like my whole list better than Nokia. I like Nokia better than Cisco. I like Juniper better than Nokia. It's probably about as defined as I can get.
All right, and then the last one, I'm going to take a look at CTXS, Citrix System. And the question is, do you think it's looking kind of toppy? Does it look like a short to you?
Well, it's definitely part of that whole cloud basket, which I view as a short. I mean, this one, you know, sometimes a stock goes down more after it's already suffered a decline. I mean, that's certainly how Facebook worked. That's how Netflix. That's how all the whole FANG trade, in fact, worked that way. The initial decline of 10 to 20% was sort of a gut-wrenching big battle, and then the last 50% of the decline, or maybe even more, the last 70% of the decline, which produced the group fell 41% to the December lows, was very easy to promulgate. It was just, once you got through the tough part, it's kind of like how stocks turn up. Once you get through that initial turn, future upside's easier. And that's where I would say, Citrix looks like technically like it could actually be versus a breakout, a breakdown. This is one I'm not short though, unless it's part of IGV. It might be a small part. I don't know if they're much of IGV, by the way. But anyway, so the bottom line is I do think it's a short, but it's not. I don't view it as attractively as the names I've been more vocal about, which are like MDV, ZS, SMAR, which I covered. So again, it's not egregiously overvalued. It's but it also doesn't have the growth of those. But yeah, I would basically say, look, if the market's going to correct, Citrix is a name that probably has more downside, than the market. So yeah, I don't know. Just pull up a weekly chart. That if they don't hold 97.50, I don't know. You tell me where it's going to go. Maybe that's a sell stop. Just like stocks or buy stops on the way up. Maybe that's a sell stop. It's not really on my list though of shorts personally, but I like the theme in general. If you're hedging, it might be a good hedging name. This is a relatively slow grower. There again, not to put too finer a point on it, but in a name I'm not short currently. I was a great short last year. Was Adobe. Like I said, I'd probably rather short Adobe than Citrix personally. But I don't know like what's going to make Citrix go up. Like, are things going to get better for them? And that again, that's kind of my whole theme on the whole cloud group. Are things going to get better than they've been the last 2, 3, 4 quarters? I don't know, man. I would say it's hard to get much better. They've had a perfect storm of goodness. They've had an accounting change, made numbers look better. They've had a lot of business traction. Again, pretty much perfect storm of buying interest by CTOs. Pressure to implement cloud solutions if you haven't already done so. Pressure to buy more cloud solutions even if you have them in place. I could go on and on and on and on about all the reasons and why typically what happens when things are late in the cycle. So that's probably if there's a best reason to short this, it's like, okay, well, let me know what things are going to get way better for them that haven't already occurred. So, I would have a hard time finding, look, what's going to get way better for Citrix that hasn't occurred in the last couple years, which has made the stock a big winner. But yeah, I know it's not one. I don't know if I'm ever going to post that I'm personally short the name. But I like the idea. I like the theory of it.
All right. Well, that IPO that you mentioned that's coming out on
did you
Friday.
Find it?
Yeah, it's called TradeWeb, ticker TW.
TradeWeb, that's it.
TW is
What's
the ticker. TW.
TW.
Yep.
Okay.
So I'll tell you what. Why don't we touch base next week? This one will have IPO'd. I'm sure LYFT will have its fair share of movement on that. And then guess what? We will be right on the cusp of earnings season. So we'll be able to get a preview, a review as to, you know, how this TW IPO shakes out. We'll get an update on LYFT and some, like I said, a preview for the upcoming earnings season.
Yeah, good enough, man.
All right. As always, Sean, thank you so much.
Great talking to you as always.
All right. Thank you as well.
Later.